Welcome and what is up there everybody, this is Casper Trader back here with another video today. And in today's video we'll be discussing how to invest your first $100 on Robinhood. And this video is going to be more tailored towards beginner investors, those who are just starting to get their toes wet in the investing world and want to start putting their money to work. So I set up a portfolio with 4 stocks that really nicely diversify your portfolio, give you the opportunity for growth and dividends. And I say that this portfolio is a phenomenal example of how to start investing even with a low budget like $100. So I'm super excited to get into today's video, but before I do, I'd really appreciate you guys could smash that like button below and subscribe to the YouTube channel if you guys have not yet. I'd really appreciate it a ton. Alright guys, so getting into the video, the first stock of the portfolio is worth around $32, so it's going to be around 1/3 of your portfolio. And this stock is SPHD. And what this stock is, it's a dividend ETF that pays out dividends every single month. Meaning that every month you'll have about 16 cents of dividends, more or less, being paid out right into your portfolio, or if you have drip enabled, it's going to be automatically reinvested into your position of the stock. And I'm a really big fan of this one, especially for someone that really is looking for dividends without much volatility, and that's basically the perfect ETF for you. That's exactly what it was made for. This ETF is made for it to not to move that much, but of course it does move a little bit, especially with the whole recent global situation going on. It did fall a bit, but it's nothing compared to some other companies out there. So this is one of those safer stocks that if you're looking to invest in something safe and that pays out dividends every single month, this is one of these stocks that I'd recommend. SPHD. It has a 6.06% dividend yield, which is about $1.92 per year that it pays out in dividends, or like I said before, 16 cents per month. So that is stock number 1, which is going to be around $32 of your $100 portfolio. Now moving on to stock number 2, and this one I'm also a huge fan of, and that is AT&T. AT&T, if you guys don't know, is like a internet provider, cellular device, cellular company. I don't know how to say it. It's basically a phone company where you go to buy your phone or you have cellular service from. And this stock is at around 29.43 cents, $29.43. And with this stock, you'll be able to earn a pretty nice dividend of 7.35%. And with this stock, you're actually buying it on a decent dip, along with the majority of stocks on this list, because of the whole global situation going on. You're going to be getting in at a pretty good deal with these stocks, especially AT&T. Usually it was at the price of around $39, $35, $36, $37 per share, but now you're buying it at a really good price of below $30 per share. And with these dividends, you'll be able to either reinvest them back into your share of AT&T if you have DRIP. And for those who don't know, DRIP is dividend reinvestment into the stock that pays you out the dividend, basically. So what that is if AT&T pays you out a dividend like it did to me right here of $2.60, for example, you can see that it says reinvested, and that means that this $2.60 was reinvested back into my position of AT&T, buying it at the price that it's at when the dividend is paid out. So it's basically a good way to snowball your money and start earning more and more and more with compound interest. So that is stock number 2 on the list, and together those 2 stocks that I've shown you are around $62 of your $100 portfolio. Now moving on to stock number 3, which is Bank of America. This stock is also one of these more safer stocks that pay out dividends. Today was a really good day for the stock market, so that's probably why these stocks are up a lot. Like, they usually don't move this much, but hey, if the stocks are going up, that means you're making money, so you definitely can't complain about that. And with Bank of America, you are going to be getting a dividend, which is not as big as the other ones, but a still decent dividend of 3.36%. And this stock is one of those more steady stocks. Bank of America isn't going away anytime soon. Doesn't look like it's going to go bankrupt anytime soon as well. So you're going to be looking at more of slow and steady gains, slow and steady capital gains, as you can see. And right now you're buying it at a really good dip price, like the majority of the stocks on this list. Like I said before, So Bank of America is going to cost you around $23 per share, and we're going to be buying one share of that for the portfolio, $100 portfolio. And like I said before, you're going to get some decent dividends and possible even decent capital gains if this stock price does recover to where it usually is at, around, let's say, $30 per share. So you'll get a nice capital gains return and a nice dividend return on Bank of America stock. Now moving on to the last stock on this list for $100, and so far we are at a total of $86. And the last stock that we're going to buy is CCL, which is Cruise Carnival, and this is going to give your portfolio a little bit more of that high risk, high reward factor, because we already put in 3 stocks that are pretty safe, so why not go with one that's going to give you a little bit more adrenaline, one that's going to either go up a lot or down a lot, but also pay a nice dividend in the meantime. And that's basically Carnival Cruise for you. It's a really cheap stock right now. It's at around below $15 per share, up 15% today. And this stock actually is at a really low price right now, and you wouldn't be expecting to get this stock at such a low price if it weren't for the whole global situation going on. And for those who don't know, Carnival Cruise is a cruise line company, and that basically speaks for itself. If this whole global situation is going on, no one's going to be going on cruises in the near future. But once this whole thing does come to a complete stop, this company will for sure, well, unless it goes bankrupt, which is that tiny little chance that it might go bankrupt, but this stock is pretty well supported, and I personally don't think it's going to go bankrupt. I'm not a financial advisor though, so make sure to do your own due diligence. That's what gives this stock that high risk, high reward factor. It usually was around $45 per share, $50 per share, even sometimes $60 per share, but now you're buying it at only $15 per share. So it's like 1/4 of the price, and if it does end up recovering like within the next 2-3 years, then you're going to make like 4 times your money. So it does give you that opportunity to make some really nice gains from a little bit of a high risk, high reward situation, but you also get a really nice dividend yield from this stock as well. So that is basically our list for the stocks, the 4 stocks that will come up to almost $100, $99 to be exact, in your portfolio. And I'd say this is a good diversified portfolio for you, for basically anyone, but make sure to do your own due diligence first. You can for sure interchange any of these stocks and create your own portfolio. This was just a sample portfolio that I did some research on and I created for you guys, but make sure to do your own research and check out any other stocks you are interested in. So that's going to be it for today's video. Thank you guys all so much for watching, and I hope you guys have a great day.